Hello, everybody. Welcome back. Thank you for tuning in again to episode 5 of Talking Smack. Today we have a special guest. As far as you guys know, we have been speaking a lot about entrepreneurship, real estate. Today we have Hidey Baez. Round of applause, everybody. Mortgage broker for
Quintessential Mortgage Group.
Quintessential Mortgage. I practiced it, but I rather.
Yes. You're fine. You're fine.
So what's up, guys? We haven't met for a few days. Hi, Heidi. How are you?
Hi. How are you? Thank you guys so much for having me. I really appreciate the opportunity.
Likewise.
And I'm very nervous, but we're gonna
We
get
got
through
this.
this, right?
Yeah.
Yeah.
Definitely.
Yeah.
In my understanding, I already said you was a mortgage broker. So before the mortgage broker, how you was into real estate, right? Like mortgage.
Yes, I was a realtor prior to becoming a licensed loan officer. So I did that for 5 years.
That sounds like cops. Whoop, whoop.
I know, yes, but in reality, that is the right term that we go by. So I am a licensed loan officer. Yeah, I just work for a brokerage company, and we are considered brokers, but we're really loan officers.
Okay.
Yeah.
But
So before
I'm gonna pause you right now, and I'm gonna ask you a question.
Yeah.
What's the difference of calling you as a mortgage broker or just walking into ABC Bank
yeah.
and asking them for a mortgage?
So
question.
yeah, it's a really great question, and there's so much to it, right? So the main difference is basically when you walk into a retail bank, you're going straight to that bank. So you're limited. Well, in that case, I would say that the bankers are limited to their certain rates and their certain products. So us as brokers, we work with 40 different lenders. So we have multiple banks that we go to for different products that they have. And we, the wholesale side of the business always has better rates. So you want to go to a mortgage broker or a mortgage brokerage to get a better interest rate, not only for you, but obviously for all the products that we have to offer. You know, there's always, if you don't qualify FHA or conventional, we have what's called the non-QM, which is non-qualified mortgages.
That's full doc, so.
Full doc, no. Yeah, we have full doc, we have out doc, we have light doc, we have no doc, you know, all of that.
Okay.
Yeah.
All right. Before your next question,
I already have one.
so that everybody can understand, walk me through, like, let's say if I'm going to purchase a home or I'm in the market for a home, walk me through the process of actually contacting a mortgage broker and what I would need from them.
So basically, you know, contacting a mortgage broker, I guess you would have to maybe, I mean, in this case, you would contact me, but, you know, you would look for a brokerage that you can trust. Obviously, you want to look for the reviews. You want to make sure that the sources are reliable as well, you know, and to see if they're actually closing, because if they don't have any activity, you don't know exactly how experienced they are. So that's what I would suggest. If you guys are looking for a mortgage broker to work with, you definitely want to look for those, and then the experience as well. How many years you have, you know, in the business, and yeah.
You are the first point of contact, though, before the realtor agent, because they want to see a pre-approval notice.
But
right?
some people don't know that. You know, some people go to the realtor and they say, "Hey, I'm interested in looking into this house. Can you show me this house?" And then the realtor would be the one to be like, "You have to get pre-approved first," because most people don't know that they have to get pre-approved first in order to view a property.
And what are the documents that they need for that?
Yeah. So for a regular, I would say somebody that's a W-2 client, all we look at is just 2 years of job history, which would be like W-2 from the prior 2 years, 4 last pay stubs, ID, a social to run credit, and that's about it. Oh, and
can I
bank
get a
statements.
pre-approval letter without running credit?
Do you have credit? Because if you don't have credit, then, you know, we wouldn't run your
Okay.
credit. But if you have credit, then yes, we will have to run your credit.
That was just a
mean,
general question. That's why.
I've
Yeah,
gotten
yeah,
a
no, I know.
pre-approval
Yeah, you've
without-
gotten pre-approval without running.
But that's
your-
because
your
he,
thing.
he knows.
Well,
me.
then that's not a pre-approval. Then that's maybe a pre-qualification. That's the
Okay.
difference. Yeah, because a pre-approval is more, I would say, a more serious document. A pre-qualification is just maybe somebody that just
Check your documents.
yeah.
Well, I'm saying
Or not
that
even
just
check your
because
documents.
At that point, we were already buying a like I just purchased this. We were buying the other one. He already knew basically.
He had info.
Oh,
yeah,
okay.
info on me.
Yeah, so he had your information, and he didn't run your credit again, right? Yeah. Okay. So maybe it was within the time frame of maybe 3 months or so that this was
Probably.
happening. Yeah. So maybe he did it that way. I mean, there's different ways that we can go around that. You see, with my company, we don't do hard inquiry pools until you guys find and are in a fully
accepted.
fully executed contract. So once we're going to submit your application to our lenders, which I had mentioned we work with 40, then we will do the hard inquiry pool. But for the pre-approval, we only do soft pools.
So 40 banks, right?
Yeah.
I go shop around and I go to 15 banks. 15 banks are going to pull my credit report.
No, just
No?
us. And we
No,
don't do.
but I'm saying, like, for example, if I'm shopping around myself and I don't
Oh.
use a mortgage broker, they're going to
No,
pull my
not
credit 15
necessarily.
times, right?
Yes.
Not necessarily.
Yeah.
Well, it depends because it depends on the bank that you go to. So I would say maybe ask that particular bank if they do their, their credit pools differently. Because some, most that I have ran into, like Chase, Wells Fargo, I know that they do hard inquiries always, and then that brings down your credit.
Okay.
Yeah.
Now going back to, I'm sorry, you had anything?
No.
What about you, Dario?
Oh no, I'm good. I'm learning financial literacy. I'm picking it up.
So going back to the beginning, which I'm completely stopped you from answering my question.
Yeah, because we just went to it.
Yeah. How did you get started in real estate
Yeah.
before going into all of this and learning the ins and outs of all of this?
Yeah. So I would say my dad, he really encouraged me to get my real estate license, and he was looking into investing at the time. I was working in his pizzeria. So, I was also in college studying accounting, which I appreciate now that I am a mortgage broker because
Now
it
you
helps
got
me out.
numbers.
Yeah, exactly. So it really, helps my background has helped me now in saving a lot of my clients in closing costs. But back then, it was more something that I just wanted to help my dad in the business of, investing. And that's how I got into real estate. That's how I got my real estate license. And then obviously once I got into the business, my dad actually met my husband
Okay.
now that he used to get a
You
lot
guys
of listings.
seen him, Alex?
Yes.
Shout out to Alex.
Yeah, shout out to Alex. So he was a really good listing agent at the time when I had started. And mind you, we both started at the same time. We just didn't know each other then, but we met in the business and he introduced us and, doing more of the realtor side. He was more of like the beast. So, I was like, okay, that's fine. Let's see what I can do. Right. So I was like, one day I just decided, we give all this business to all of these mortgage brokers or bankers, why don't I
Do it.
why don't I see
you
the
got
other
the
side of the
wholesale.
transaction? Exactly. So I started to understand it more. And then from there, I was just like, I'm going to go ahead and get licensed. And he supported me the whole way. And now we're the dream team, right?
Yeah.
They are missing a part of this, though.
What is it?
They need the lawyer.
Well, yeah.
Oh, but that's where little Alex comes in.
Yeah.
Yeah, exactly. Exactly.
Coming soon.
Well, let's see, because I don't like to push anything on,
No,
on the
definitely.
kids.
It's
But
whatever they want.
yeah, but definitely, Alex says it all the time. He's saying that he wants one of them to be either a judge or a real estate attorney.
Damn, no baseball? Oh my goodness, this guy.
And a little bit of basketball, I think. I don't think baseball.
No?
Yeah, I don't think so. But let's see what happens,
Yeah.
It's whatever they like.
For sure.
Yeah.
I had something else. Go ahead, continue, Justly. Dale.
Nothing comes to mind right now.
All right. Going into the mortgage brokerage thing again. How do you know what to offer the client? As far as like what they should go to, what percentage down they should put? How do you know if they're ready or not?
Exactly. I love this question because, your brother said, somebody already had pre-qualified him, right? So that's what I would do once I have the initial conversation with them. You know, I'm asking them, okay, how long have you been in your job? What kind of job do you have? What exactly do you do? You know, how do you get paid? Because there's different programs for different clients. Everybody's scenario is different. Like, I just let you guys know what documents I need for just a regular W-2 client. But let's say this person is self-employed. That's a completely different world. You know, I'm looking at tax returns, 2 years. I'm looking at business tax returns, corporation docs, each different corporation, because there's people that have multiple, you know.
They'll open a new one just to buy that.
And then they open new ones, and then they have like 1,000 bank statements. Which, you know, we have programs for
I'm laughing because it's
those
me.
people. Yeah, you see, and we do appreciate you guys. But yeah, it's a lot. But, you know, I would say, you know, for those particular clients, we have even more programs because sometimes, not always, do they write off exactly everything they make, right? So we always have, you know.
YouTube didn't hear this.
Yeah, well, it's the truth. But,
Yeah.
you know, there's programs for all of those people out there. Yeah.
Now you said, let's say we close a mortgage today. We closed a house, bang, bang, bang. 3 months later, I get a bill from a different mortgage company. I want to know what's the back end of that. Like,
Yeah.
so they'll close with me and then they'll sell it to a different bank. How does it work? How do they make that initial closing money? Why do they sell it? Do you know any ins and outs about that?
So the lenders have guidelines that they have to follow in order to get it to be sold into the secondary market. So the secondary market is usually bigger, and they buy these loans for a longer period of time. But that's why they usually qualify your mortgage and have it for a certain amount of time, and then they resell it. I don't really know what's the idea of that. I know that it's just
There has to be some
It's
money
just a
making
loan.
between
Yeah.
the transfer.
I
don't
know.
what it is.
You make a
but
commission. You bring in a sale to them.
yeah. I'm not. I don't want to I don't want to sound like I don't know, but I will probably have to get back to you guys on that.
yeah,
just
it's
because
better to not misinform.
Yeah, exactly. I just know that usually they have to let you know if they're going to sell the loan. They have to let you know 15 days before. You have a 15-day also forgiveness period. If you don't pay your mortgage off to the right mortgage company, they have that forgiveness.
Now that you're a mortgage broker, you're in the office all day, right?
Yes.
Do you miss being out showing stuff, going out?
I do sometimes, but not always, because when it's cold and stuff, I'm like, I'm happy I'm here.
But it was easy. You could have just been like, hey, Master Lister, go ahead. Show
exactly. Yeah. So then we have my husband that he does that. He does so good in real estate, and he's always been great in like showings and stuff. So yeah.
Vamos a esto. What's next, Brutal?
I have nothing.
Damn.
I have nothing.
Está limpio tú.
Dariel, tú estás callado ahí.
Dariel's learning financial literacy right now.
Pretty much.
That's
It's
my
a lot.
favorite subject, I think.
He wants to build a duplex, side-by-side duplex.
Okay.
That would be nice. That would be. Yeah. How do you start off?
Yeah. Let's talk about that actually. If you want to build, let's talk about construction loans.
Okay.
Yeah.
What do you need? This, that, bang, bang.
Yeah, construction is another completely different ball game, but It's the same thing. Usually, if you guys want to close in like under a corporation or a LLC, we will need those particular docs, 2-year tax returns, and like I said, if you don't qualify FHA or conventional, we do have the non-qualified mortgage loans, and basically, if you do it under an LLC, we will be running the primary grantor's credit, looking at his bank statements just to see if he is liable or has any type of assets at the moment. And yeah, from there, they will qualify regularly.
Okay.
Yeah. And like I
Interest
said,
rates.
if they, yeah,
So-
interest rates are always higher for those special loans, for the non-qualified mortgage loans. It depends also on their credit. So, we're looking at 9 to 11%.
And let's say I had
Depending.
purchased a piece of land, straight cash, because
Okay.
I know that most people use that as the down payment, basically, because usually it's like a 20, 25, 30%
Yeah.
needed. So they use the land itself as the down payment for a construction loan. What percentage would they loan out, and like what other terms?
So it depends on your credit. And in that case, it will depend on your credit. Let's say if you have a 740 or above, you won't be getting any hits. Even though in New York, there's so many hits. I'm gonna be honest. But you're gonna be looking like a 25 to 30% down, like down payment, stuff like that. So yeah. I forgot the question. I'm sorry.
It's okay. I was saying using the land as like the down payment.
Okay.
What the lending
okay. Understand
lending
now.
size basically. So like let's say I bought a piece of land for $200,000, right?
Okay.
Paid cash.
Or
Okay,
let's say
paid
let's
cash.
make it simple. $300,000. That's the 30% needed.
Okay.
They're loaning out the 70%, or they're going off of what you need for construction, or what exactly?
So it depends on the loan in that case. If you get a 2 or 3K loan, you're going to be using the land
As a deposit.
as a deposit, yes. But we're looking at the renovation, how much it would be worth after it's renovated. So that's what it will be based off
So-
going. Yeah. What the bank will be able to lend you is based off what they believe
The
will be in
appraisal.
equity. Yes, exactly. After all the renovation has been done. So that's what they'll be able to lend on.
Okay. So you've been doing this for a long time. You have mortgage, you have real estate, you have all of that under your belt.
Yes.
What certifications or programs or things you need to take so that way I can be in the position you are?
Okay. So
Don't try to take a job now.
no,
Yeah, but I want my viewers
it's
to
fine.
know.
Yeah, no,
Come
for
on.
anybody interested in getting their loan originator's license, basically you would need to take I forget if it was a 96-hour course.
Pero yo me voy a dormir una semana por ahí.
96 hours and yeah, it was a lot of hours, and you have to take, I remember taking a very long exam for like about 4 hours, I would say 3.5 hours depending on yeah.
It's like another SAT.
Well, then I got licensed in New York, so I know that once you take that exam, you can be licensed anywhere, but you just have to pay for certain licenses in different states.
So you're licensed in Jersey too, right?
Yeah,
Florida.
Jersey, Florida, Pennsylvania, Connecticut, and New York. So that one exam is for all of the states. You just have to pay like the originations fees for
Like their fees. Okay.
yeah.
How do you go about approaching new clients? Like how do they come to you?
So my best sources now are realtors. I do work with a lot of realtor partners now that do send me a lot of their clients, especially ITIN. That's a really big program that we have. So yeah, I follow up, calling these clients, just making sure that they know exactly
And
how
you guys
to.
don't use like Google ads and things like that?
Yeah, you can buying leads and stuff.
Mhm,
Yeah, through Zillow. But I personally haven't done it yet, just because, like, since I'm working with so many realtor partners, they usually refer me the business. I also get my business more from attorneys, real estate attorneys, anybody that does, like, or know anyone, even my own family. They have known a lot of people that are interested in buying, and
It's not what you
Okay.
know, it's who you know.
exactly, and that one person can change your life, right? Yeah. So,
Closing costs, is that something that the mortgage broker calculates, or that's something that the realtor calculates? How does that go?
so usually the mortgage broker will let you know how much will be your closing costs. A realtor has an idea, but every county has different closing costs. It's not just one set, and that's where a lot of people do get confused, because in certain parts of New York, like in the Bronx, they're lower than in Upper Westchester, and in Connecticut is like 2%. So they can give you like a ballpark, but your loan officer should know this
You don't
information.
know until like the very end, basically.
Well, if they give me the address, I'll be able to pull something up, yeah, and let them know how much their closing costs will be. Just an estimate, of course.
I want to know what everybody wants to know.
How
What's
you
the
get paid?
question?
Commission.
Yeah.
1, 2, 3, 4, 5%.
Why not 100?
No, it's not. It's not no realtor commission.
Yeah, but we could do a lot more sitting in the office.
Yeah. So usually we do work by commission, and we get
Loan amount,
1%.
right?
Yeah.
1%.
From the loan amount. Yes.
Okay, I've seen 2.
Where? Because
Actually, we've seen 2. No,
No.
it was 1. Okay.
yeah, it's 1%.
Damn, I'd rather be a realtor than I'll take
Yeah,
5.
because you get
4,
and you
3.
get paid right there. If
You
you're a
don't take
realtor.
5 as a realtor. It's usually like 6%, and you split it in half,
Oh yeah,
and
seller
sometimes even
broker.
less than that.
6% and you split in half.
So
Between the
Yeah.
seller broker and the buyer broker.
Oh, okay.
Mind you, us we get 1%,
And you get all the headaches of the phone calls.
exactly. Oh my
How are we gonna
goodness.
close next week if you're still missing 3 statements and you used your credit card last week?
No, but we love it, right? I mean, this is what we do, so
Yeah.
it's the offer we.
it's a numbers game.
Yeah, exactly.
Is there anything you're looking forward to doing, like to grow in that particular field?
Of course, you always want to be one of the top originators. Not only that, but the real estate market and the real estate field is always so big. There's so much. And being on this lender side of everything, it kind of makes me want to be a lender. You see how the lenders are making their money, and you see the bigger picture. It's not just about closing loans, but
How
what
do
if
you
you're in
become a
front?
lender?
How do you
Do you
become
need
a lender?
capital? Because I just see
Yes.
these crazy companies
How are
out
they
left
gonna
and
give-
right with no
How
how.
are you gonna lend money without capital?
I don't know how they
Exactly.
do it. That's why I want to know.
Yeah, you need to have at least 1 million to like spare.
But
Or
1
Like,
million
just don't
only
care
buys
about-
you 2 loans.
Well, that's how you start building, right? And then you get the interest. That's where most of the money is coming from. Is from the interest and the principal of the loan. So that's mainly where the lenders are making their big fee. That's why the non-QM world is so big, because it's specific investors. They're investors. It's not, it goes through a bank, but then that little bank
It's
probably
funded
has
from private investors.
Exactly.
I
That's
thought there
multiple
was.
thing.
I thought they used to like get loans from take out loans from bigger banks to cover those. But okay.
Yeah, well, it's vice versa, but from what I've seen, usually the banks are using their investors, and they have their investors signed up already with them, and then they're selling them those loans.
Okay.
Yeah.
So lately, I say like a year to 18 months from now, interest rates have been like up nonstop. I noticed how there was no changes the last time, like
Quarter?
the last quarter, there was no changes.
Yeah.
How do you where do you track all of this? How do you keep up to date?
It's not that there hasn't been any changes; it's that the changes have been small.
Yeah, they have been very small. And it basically you just have to follow the stock market. Whenever you see, it's going up, you're gonna see interest rates going up as well. If it's getting
Okay.
better, it's
And it doesn't go by like the Federal Reserves, right?
yes, it does go by the Federal Reserves. The Feds are the ones that control it. So
Are you able to get anybody a mortgage at the exact Fed rate of today, or it has to be a little bit higher?
no, of course,
Yeah?
we always close at yeah.
Yeah.
Really?
We even what's so great about being a mortgage broker is that somebody can tell me I want this rate, right? Obviously, according to their
has to be backing.
according to their FICO and LTV or whatever they're putting
Down payment.
down,
They have to be solid.
they have to be a good type of buyer, and they can buy points to buy it to where they want to get it,
How much is 1 point?
depending on the loan amount. Yeah,
Remember, we didn't buy it down the point.
you didn't buy
that
it down
It's
the
like 9,000 and stuff.
Oh, for 1 point?
Yeah, fair point.
Wow. They keep their point. I'll keep paying months.
but it goes by basis points, so it's
point
like-
0.001 is 1
to
point.
make it so you guys can understand is like maybe a quarter like that you guys can pay to make it a point. You understand?
Okay.
Kind of.
No, but okay.
I'm sorry.
Yeah,
I didn't
it's-
mean I meant 100 points basically, so
Yeah,
a percent.
exactly.
Yeah,
a
1
percent.
full percent.
There
Because
you
a
go.
point is 0.01.
Exactly.
Yeah.
Yeah. It goes by basis points, so that's why. Yeah. But so we do keep track of the national average, and you guys could look it up in Google. Usually they're pretty solid when you Google what's the national average as of today. You'll see it's about 7.2, if I'm not mistaken. That's what I last checked. But we have been closing most of my clients. They're buying a little bit of points. So I'm able to get them a 6.8.
I've seen
Yeah.
recently, this is probably like a month or two ago already. No, not that long. Maybe a month. Where like the average APR at closing was tracking around 8%,
Wow.
which is really high compared to what we used to have.
On what? On closing as of
On your APR, right?
So the interest rates of the properties, basically.
so the interest rate was 8.
No.
The
About
average.
the average.
Oh,
So
an average. That seems
there's some-
very high.
Yeah, very high.
It was the highest I would say I think it was maybe at 7.8. So how long ago was this maybe? Or maybe they
maybe
just
a
didn't
month
buy.
ago, I would say.
Without
It was
buying
a couple of
points.
weeks ago, definitely.
Yeah, because some of these apps, these mortgage apps, they give you the average on what is closing. So a lot of people get confused and say, no, the interest rate is lower than what you're saying. Yeah, but that, if you're going by this, application, obviously it's going to show you what's been closing. And usually we close with charging a buyer a point or two towards their principal and interest
Okay.
to help out the rate, obviously, because most people aren't happy with how high the interest rate were.
Yeah,
At the
they could
time.
have bought $1 million house and now it's 500,000 because of the rates.
Exactly.
People are never
Now they're
happy.
getting better. Yeah.
Let's put it
So,
like that.
Do you guys get any kickbacks from the mortgage lenders?
oh my God. Don't even say that. No. That's completely
Illegal?
fraudulent. Yeah.
Oh.
We cannot
Maybe off
do
of
none of
YouTube.
that.
I guess I don't
Yeah.
belong on that business then.
Yeah, no, because we're not allowed to get
Accept
any kickbacks.
kickbacks,
No,
okay.
or accept nothing.
Okay.
Yeah.
Let's say I have it's a whole scenario, a whole different scenario. Let's say I have a 650 credit score because I never use my credit. I don't have no credit. And I saw a $450,000 house. And I have solid statements. I have probably not a 20-25% down, but let's say I have a 10-15.
Okay.
Is it possible to get a mortgage?
And you said your credit score was 650?
Yes.
Yeah, 660 will be able to help you with a
660 with
with
a 10
percent down.
60?
with 10 with 10% down.
Yeah, 10 to 15% down.
Okay.
Now,
Yeah.
what if he had like a stable job for like the past 4 years?
That's fine. Most of
Off the books.
off the
Oh,
books.
that doesn't work.
Okay, so
You
no.
got to 1099 that before the end of the year.
Yeah, you need to the money or the income that you'll be getting has to be sourceable. So let's say if it's off the books, there's no way to trace that cash. In that case, we can maybe possibly look into a bank statement loan, but then again, you're going to have your own company to show at least maybe 1 year actually, if the company has been open for more than 5 years, then we'll be able to look at just 1 year tax returns. If not, then you're going to have to show 2.
Okay.
Yeah.
So
But yes, with a
10
660.
with 660, 10%,
Yeah.
10,000 down approximately out of 500,000, 400 something thousand. That's not bad.
Well, 10% off of that.
10% down
So
off
it
of
would,
that. That's
yeah.
not bad.
That'd be
Yeah.
considered a conventional loan, though. Right?
No, it would be if we're talking bank statements, then it will be a well, you can qualify conventionally depending, but
The down would be more.
yeah, the down would be more. It would be more of a 15, and then you will have to look at if it's an investment. If it's an investment, then we're doing 20%, 15%. If it's a primary residence, Fannie Mae just came out with a product for conventional primary buyers. Like they will have to live in the property, obviously, but they can buy it. Multifamily use with just as little as 5% down, which is amazing. A lot of people knew
How
that
long those programs last?
it usually a specific time frame.
Time
We
frame.
don't know when they end, but we just know that when it ends,
It's
and then
done.
it's not available anymore. But right now that is available if you guys do want to buy conventionally. But the bank statement that we were talking about with the 660 with a possible 10% down, due to the fact that you said that the off the books situation, we were gonna have to do a non-QM because of that. Because
QM stands for?
the non-QM is no, it's non-qualified mortgage.
Okay, okay.
Yeah, but then because it's not traceable, you see.
Yeah.
So if you have a solid job that has been paying you like a W-2, then that's fine. You qualify conventionally. But if it's all cash, then
And as a
That's not-
1099,
yeah, as a 1099, if it's your own company, we'll be able to see your taxes.
what if
Yeah.
it's not your own company? That's what I'm saying. If it's like I say, you're working for Uber, it's a 1099.
Okay.
You should have.
yeah.
So then they're gonna check your taxes because
They'll
you should
check
have
your
used it as
taxes. Exactly.
your income source on
Exactly.
your taxes.
And then in those taxes, it has to be a good amount for you to get qualified, not just zero. Because I've
Yeah.
seen
Health is-
zero. Exactly. So that's why we usually, when we talk about like 1099 or self-employed, we usually offer those non-QM products.
How many customers you usually get with? I have this much money cash. Why I can't just buy this?
I think all my clientele is that. All of my clientele.
Why
Yeah.
I can't just buy this? I got
Exactly.
all
All of my clientele,
that. Why
I
it's
feel
so
like,
difficult?
yeah, a lot.
Because the Fed needs their cut. That's why.
Exactly. And a
That's
lot of
so
people,
true.
yeah, think they can outdo, I guess.
Yeah.
So credit is king.
Yeah.
Okay.
So
So don't buy a car.
and
Cash.
and the Fed is
Yeah.
God if credit is king.
Another scenario I want to talk about. We closed on a house. Bang, bang, bang. What services you provide after like
after closing,
yeah.
So whatever you need, honestly, if you guys need help, like reaching out to a particular bank, on let's say if you want to do a refinance, you want to either do a cash out or you want to maybe get a different type of loan, we can convert it.
What about a
depending-
HELOC?
Or HELOC, all of that.
Yeah, we do all of that. We do HELOCs,
And
refinances.
The
all of
HELOCs
that.
will
Construction loans we spoke about already.
Yeah.
We do.
Exactly.
The HELOCs will loan on how much percent from the appraised value?
Depending on how much you guys want to take
Equity.
out. So exactly. How much equity you will have in the property. Usually we do from 100,000 up.
Wait.
Nothing lower.
So if you have $100,000 in equity,
You'll be able to
get
take out.
70,000.
No, 100,000.
No,
Uh-huh.
so let me put it like this, basically. So if it's a $500,000 house, you put 20% down, so you have $100,000 in equity.
Yeah.
How much would you be able to take out?
On a HELOC.
On a HELOC. So there's certain banks that will do it lower for 100,000, but in my particular bank, we only do.
So
For
then
100,000.
basically, let's say if you double that, it makes sense.
Yeah.
So if it's $1 million, you put 200,000 down.
Then you could take out
You'd be-
100.
If you can take, if you have that amount in equity, then you can. If it's going to appraise for that, then we can take it out. Yes.
So they'll
Okay.
loan up to, let's say, 90% of the appraised value.
Yeah. Usually.
Okay. What how are those payments done? Are they included into your mortgage, or that's a completely different loan?
It's like a credit card, I think.
Yeah, it's like a credit card, depending on how often you use it.
So I could go to Saks and swipe it. I go to Saks
Well-
Fifth Avenue.
That's the dumbest.
Yeah, exactly. I wouldn't use it for that, but you can definitely do whatever you want with that. It's like a credit card, like he said.
Okay.
You're gonna
Yeah.
put your home.
Pause it. Wait, hold on.
Pause.
We go buy clothes with the HELOC loan.
Exactly. And Saks.
You're gonna put your home on the line for
Yeah.
Saks.
That's crazy.
That's OD. Yeah.
I mean, I've seen people do that for jewelry.
Oh my
wow.
God.
Wow.
That's a
You know
very
it
special
happens.
industry.
Really?
Oh my
Yeah.
God. There is no other industry like that.
What, the jewelry?
Yeah,
Yeah.
it's crazy.
That is very special.
Yeah.
Mm-hmm.
You know, I don't know a lot about it, but it sounds interesting.
There's a lot of things we could talk about off camera because I love you, my customers.
Because you love your customers.
Yeah,
Exactly. Yeah.
exactly. Justly, dale.
I had a question. I completely
Besides,
forgot
besides the 1% mortgage fee, is there any other like hidden fees?
Hidden fees that go to us? No.
Yeah, no.
No.
Okay.
No other hidden fees. And that's what a lot of people do get confused also. Like they feel like I don't know. Like I had this one client, I feel like people do get confused when they say, you know, okay, the points, right? The points are going towards your principal and interest, not going to me. You know? So the bank is the one that pays us, not the buyer. And that's why I'm saying, like, a lot of people do get confused in sense of, you know, oh,
Because it shows it there, but the bank is the one who's paying you. That's probably why.
there's origination fees and there's like underwriter fees. Those are going directly to the bank,
Okay.
not to me. Yeah.
All right.
I got a question actually. Have you ever dealt with a 10
99?
1031 exchange.
Exchange.
Yeah, a 1031 exchange.
That they need a loan on it.
Mhm.
I'm not gonna lie, I haven't done a 1031 exchange.
Okay.
I haven't, but
'Cause that's
I do
usually
know
like
that
lawyers
works.
and
Well,
and
there's
accountants that
there's
work on
specific
that.
companies actually that you deal with that. Like when you sell your property, the money doesn't go into your bank account; it goes into theirs, and they hold it in escrow.
escrow account. Okay.
I have a question. It's a bit different. Has technology, because I know this year, like a lot of AI stuff has come out. I want to know, has technology changed anything work-wise? Maybe helped you?
Oh yeah, a lot. I use and I have my realtors use our mortgage application. Basically, it's just the mortgage app from my company that they can literally apply for a mortgage, put all their information.
Oh, so it's like a portal.
Exactly. And upload all of their documents directly to the portal. I get everything into my system, which
Beautiful.
I love. Yeah. And it's so
Organized.
easy. Yes, I love it. And please, if your realtors are sending you those type of apps, use them. They are very essential, not only
Remember,
for
you
your
need her
organization.
before the realtor.
Exactly.
But you
need
gotta
her.
plug in your Instagram and your
Yes.
the website and everything.
Yeah. Me?
Yeah.
Yeah, go ahead.
Oh, with,
Like,
with the app.
Oh, put it now. Like,
Yeah,
wait,
you
say
can
it.
plug in.
Plug it in.
Oh.
Vamos.
Okay.
I thought we were talking about the app. Actually, you talking about plug it in right now. Let's go.
wait, but that's why I'm like, wait, are we talking
Yeah,
about
I was
the app or
confused
what? So, the link is not my Instagram, but I mean, you can find my link on my Instagram, which is Bias Mortgage.
And it has a
Underscore.
mortgage calculator there.
Yes, it does. It has everything. I'm telling you, it's
Chocolate.
very organized. Sorry, I know that hurt. But yes, it's very organized, and you can even like contact me on there as well. You can contact the realtor that also referred you to me. It's amazing. It's really organized. I love it. It's simple. You can even see like estimate of what your mortgage payment would be if you of course have all of the information, you know, the taxes and interest rate, everything.
On website?
On the application.
So it's also
This is
there.
all the application.
Everything is there.
Everything.
Nice.
Perfect.
Yeah.
There's no looking around.
Yeah. So you know, going back to his question, yes, it really has helped, and I really encourage everyone to use technology.
And do you use any sort of AI or anything like that? Because this is his favorite question, actually.
AI. Let's just
To
say
write your
with some
reports.
no
I
to
do it.
some
writes my
emails, you know, if I don't know how to word something in particular, you know, AI has been great with rewording something.
Rephrasing, it's crazy.
Exactly. So, you know, it does help me out with some emails, some difficult emails, because I don't use it all the time, but yeah, it's very helpful.
You're
Right.
probably one of those email people that be like, oh, look, he's missing a period here. He didn't put the capital here.
Yeah, kinda. I hate to be that person, but you know, it gets to you.
The what's it called again? The
1031?
no,
I need more context.
La Gringa Necia, what they call them?
Karen?
The Karen of emails.
Oh my God, no, don't, please don't call me that. Yeah, but no. When it comes to AI, I usually am the one to write it out, so I'm not like literally
Just
looking at
rephrase
them
it.
exactly. So it's not that serious, you know. I'm not making the whole show.
With more time, I think it'd be more part of your job. You'll see it more.
Yeah.
Because within like the last year or two, it's just blown up.
Yeah, it has. It has, and it's made a lot of people's jobs more easier. I feel.
Definitely.
When it comes to yeah, when it comes to wording stuff and making it sound professional, and
Yeah.
nice, yeah, and clean,
Refinance.
yeah,
Have you done any refinance? Have you done any refinances lately? Which
of course. Yeah.
really with these high rates?
Yes, believe it or not, there's people that, like you see, divorcees. You know, those are people that really do need to maybe get out of a situation that have been, you know, my prime customers now in sense of doing refinances. So yes.
I was going to ask in which situation. So
Yeah, that's one of the main situations I would say.
What's the biggest gap in interest rate change you've seen with these refinances lately?
Interest rate gap. I mean,
Yeah, like
we're
they
at
had
the lowest now.
let's say they had a 4 and now they're
Yeah.
refinancing at a like 9. Has you
at
seen
a
that?
at a 7. Yes, I did one at 9.8.
And they were at what before?
They were at a 4. Yeah, 4.2.
I would never touch
I would never do that. Their payments doubled.
Yeah,
they just killed me.
I mean, you know, it depends. Like you
said
see,
divorced couples?
yeah.
Wow.
There's nothing else to do. You got to do it.
If you got to do it, you know, and then there's some people that have to cash out. You know, there's those scenarios. So it's a scenario that you have to do it, so you don't really care about it at the
Well,
time,
I
and you
understand
just care about
for-
the monthly payment.
I understand for like construction. Like let's say you just built a multifamily and their construction loan.
Mm-hmm.
You gotta
Or
refinance that.
not even a construction loan, a hard money loan.
Yeah,
let's
when
say.
you're doing
my
hard money.
And then you
Hard
have to
money
refinance it because you have to pay them back
Exactly.
and try to get a stable or fixed
Yep.
income rate.
Yeah, that's another situation. I just had somebody do a hard loan that
And that's another
usually,
question.
usually with those hard money is
You have
also
some
a
of
complete.
those people.
Yes, and we also do hard money.
Oh wow.
Yeah, so it's completely different as well, but yeah, those are usually balloon payment mortgages. Sometimes you see people using their homes as like the equity and putting it on the
Collateral.
line. Yeah, collateral and putting it on the line. So, you know, I'm not a big seller on them just because it's a very risky loan.
Very.
I would prefer selling you guys a non-qualified mortgage 10 times before we do that.
Okay.
But it depends, of course, of the scenario that you guys are in.
Situation.
Yeah.
And at what rate, give or take, is it around right now for a hard money loan?
Yeah, so a hard money, I just did one. It was at 11.
Oh, that's
Wow.
not even as bad as I thought.
No, it's not too bad.
That's-
and that one
that's
was a
double
great
digits.
one.
I've seen crazy ones.
That was a 800 loan
800,000?
amount. Yeah. That was an 800 one at 11%.
At 11%.
That's like $15,000 a month in
no,
interest.
it's not that high. You're going off the board.
That's still a lot of money.
No, her payment was like about
Yeah.
9,000.
I was gonna say 10. So
Yeah, around there. I remember it
Okay.
being. But it's always the particular scenario that the person is
The
in.
situation you're in.
The situation, because if you can pay it monthly, you're not worried about the interest at all.
Yeah, for sure.
Yeah.
I'd rather pay interest than have the money moving somewhere else. And
Really? You
just
think
keeping
so?
just
What?
keeping the money in my pocket.
I
you
think
rather
he's
not pay
confused.
interest. You mean?
I'd rather pay interest
Yeah, that's what he said.
Then-
Pay interest.
and keep my money flowing somewhere else than not pay any interest.
If you're making more money than the interest is charging,
Yes, for sure. Of course. I'm not.
numbers don't lie. Numbers don't lie.
Of course.
Yeah. Yeah.
For sure.
And also, let's talk about
Wait, I have
Interest-
another. I
oh,
have another
go
question
ahead.
about the hard money loans. Usually they're interest only payments or they're balloon
That's my
payments or
question, basically.
Usually, they're interest only payments, depending also like if the loan is using collateral, then it will be a balloon mortgage, bridge. Yeah, so that was
And
the
usually
last
the
one.
balloon is what, 6-12 months?
Yeah, 6. This one was a 12 month. So yeah. Usually you see them for a year, so 12 months.
And then actually talking about the balloon, because
Yeah.
I've only noticed this like within like the last 2-3 months,
Okay.
where commercial loans are very different than
yes.
very very different.
Have
than
you done
normal.
I actually
any?
want to know about that commercial. Yeah.
Commercial? No, I've had clients come to me and ask me, but since it's a little
Complicated.
complicated, exactly. Like you're waiting on permits, you're waiting on like DOB.
And the term is so different.
Exactly.
The 7 arm, I don't even know what that is. 5
Yeah.
arm.
yeah,
So-
adjustable rate mortgages are what the ARM stands for. Adjustable rate mortgages. So
Okay.
Yeah, that's basically my question. Where it's like,
Yeah.
they don't offer anything fixed for 30 years. Let's say,
Mm.
so it's everything is is on an arm.
yeah.
You either get like 5, 7, 10 maybe years on it, and then there's a balloon payment.
Yeah.
And
It usually
they ask for it obligado? Like you have to pay them their full amount?
You
when
can
they ask for the
refinance
balloon?
it.
you can refinance it into a regular loan depending on the loan that you have, but there's always ways that you can get out of it before the term ends. So usually the best time that you see them is after 6 months, 6 to 7 months.
The biggest risk I see in that then is you signing the wrong. Like for example, right now, before the pandemic, you signed a lease for 5 years.
That's a big risk that's happening right
You
now.
get what I'm saying? You find, and then because you're paying 3%, and then now you're gonna pay 7%. So the person who you lease your property to is gonna be paying you under what you're gonna pay in interest.
The numbers don't make sense.
So it doesn't. That's a lot of people are gonna be selling them now. All these commercial properties.
Yeah. I didn't really understand what you meant by leasing. So you're
So,
talking
for
about
example,
a commercial.
Yeah, let's say you own a commercial property.
Yeah.
You lease it for 5 years when interest rates were at
2.8.
2.8
Leasing it to who?
to a
Anyone.
company.
Okay.
For 5 years.
Like
you
a
lease it
dwelling
to-
rate.
right? Let's say you lease it, yeah, for
Okay.
5 years. Interest rates were at 3, so you're going against what you're paying now. But then
it.
you got a 3-year arm. 3 years later, the lease is still at a certain amount, but your
Yeah.
interest rates just
Gone
went
up. Yes. And it's also a
You
risk.
have to sell.
Yeah. Well, I mean, not really sell, but you can refinance it.
But
Or-
even if you refinance,
It's high.
if it's at a higher percentage and the lease
Yeah.
doesn't cover it,
exactly.
you're
would
either
have to
coming out of
sell.
pocket, or if you don't have that money, you have to sell it or
Yeah.
do something.
And in that case, yes, those are very particular.
Yeah, you have to have a
scenarios.
lot of big in this
Cojones.
business.
Yeah.
Yes.
Yeah, it's
Risky.
it's a very risky business. But you gotta love it because either way it's never gonna be buying a house is never gonna be the same 10 years from now.
For sure.
It's always gonna be cheaper now, so get it done now than later.
Yeah.
It's
If
like
you
getting
can.
into
I
the
mean,
stock
If you
market.
can.
I've always said it
Yeah.
where it's like you just jump into it, hope for the best. Well, you have to make sure you do
Yeah.
the best,
Obviously.
and then If interest rates go down, great, you just refinance. If they go up, well, you just quote it at a lower percentage.
Yeah, it's true.
Yeah, that's one thing I always gotten from him is you hope for the best. Wait. What was it again?
You prepare for the worst.
For the rest and hope for the
And
best.
And hope for the best. Yeah, and that's big because you know, you gotta also like throw yourself into it.
Can't be
you know?
scared.
Yeah, you can't be scared. You gotta just go for it. You know, and if you're qualified to do so, why not take the risk? I mean, most of the time, you're usually building enough equity to get out.
Now that we're talking about take the
Yeah.
risk, how is it for all these moms that are out there that are scared to move forward because they have kids that they got to worry about this, that? How is the life as a mortgage broker having kids and
Yeah.
being a mom and having to be there, having to pick them up? I mean, you have help, you have Alex, mom, but still, what's it like to be?
I know
a mom
sometimes
and
you want to
being-
kill them.
and being prepared for all of this every day.
Yeah, it's you know, it's a mindset. You know, you gotta like I said, you're never really ready for whatever life is gonna throw at you.
You just gotta
so
go.
you just gotta roll with it, you know?
with
Like,
the flow.
okay, I gotta meet with this client. Okay, let's meet. I gotta be out at 2, you know? All right, 2, pick up my son, then you know, get on a phone call with the next person and that's kind of how my life has been lately. It's been very fast, but you know, it's what life is. And whenever, you know, you're growing, you feel uncomfortable. I always say that. So, you know, growth is uncomfortable and you'll see that as you're moving forward. And then the next thing you'll know, like, okay, you probably find this so hard right now, but once you're in it and once you get used to it, it's going to be a piece of cake. Well,
You're gonna be
it's
back
not
into
that.
your comfort zone.
And it will pass. It will pass.
How does it feel to actually get out of your comfort zone? Because I'm out of my comfort zone right now because this is something still new for me.
Yeah.
But how does it feel to get out of where you feel like, oh, this is where I belong? Like,
Yeah.
how does it feel to get out? I know it's very uncomfortable.
It's scary, but you know, you got to do it. You got to do it because you want to grow, right? You want to do new things. Also, you never just want to stay doing the same thing because also it's not a routine that you know, a lot of people say that, but following and making sure you have like the right mindset. I feel like it's all about the mindset. I feel that you just
Do it
you'll
for the
get through
plot.
it.
No, mentality for everything we do in life is a big part
Yeah.
of the way we.
No,
move
your
forward.
mentality is just tírate.
Yeah, we got. The thing is that
I have become like that, too.
I have that kind of mentality where
Yeah.
I'm gonna do it. I can't, whatever. We're gonna
Yeah.
do it.
Yeah.
And I
Just
know it's
do it
gonna
for the
happen. And we're
storyline.
gonna make it happen. And it's gonna be.
I'm usually
positive.
like, let's look at the numbers. Let's
I
chill,
don't need to. It's
calm
gonna be
down, this
positive.
and that.
Let's do it.
And then tomorrow, I'm in this
Oh,
big ass
shit, I
hole just
fucked up.
because of his guy.
I fucked up.
But I mean,
We make it happen.
yeah, don't you just love that situation though, that you gotta like figure it out,
Yes.
That's
and then
fun.
you're
I
proud
love
of
it.
yourself because you figured it out, right?
It's fun.
It's scary
As
as,
long as
hell
the
though.
pressure
But
is
Yeah,
on
that's the most scary part
Yeah.
of entrepreneurship and actually
Yeah.
working for yourself is making it happen.
make it happen. Make it happen. Figure it out. You know, it's hard now. Okay, it'll be worse.
It'll be worse if you
Yeah,
don't
it's
figure
never-
it out.
yeah. it never
Once
gets
the
better.
pressure's on,
Yep.
you do something.
Exactly.
Definitely.
And you know that being a mom, you know, that always comes first, right? So it's just a balance also that you gotta llevar, you know, you gotta take. You just gotta find that right balance for you, whatever
You
works
have
for you.
2 kids,
Yes,
a boy and a girl.
yes, and that's it. No
Ya
more
no
for
más.
me. No,
You're
Oh,
missing a
man.
third. I'm telling you.
no,
the
no,
lawyer.
no, please.
The lawyer.
That's gonna be my son or my baby girl. You know, whatever they like. I always say I'm gonna.
Match me 4.
You got 4?
Yeah.
Oh my god. How do you do it?
I do it. We make it happen. Now 2 of
Yeah.
them don't live with me though. They live with their
Oh,
mom.
okay.
Mhm.
Okay. But I mean, it's still,
It's still, yeah.
Yeah.
Mhm.
And then the birthdays, and then you got.
And
Well,
then
you
it's-
probably don't.
And then I have to prepare the summer vacations. This,
Yeah.
that.
Activities.
I gotta keep them busy. The two that don't live with me, swimming, bang, this activity, that activity.
And then you gotta go to like these special
Yeah.
games, right? You see, and then it's a lot.
And then in one whole week, you don't do anything because you just
Yeah.
went this game, this activity, this, but
Lovely,
we got to
lovely.
make it happen, right?
Yeah, exactly.
All right,
exactly.
let's close it out. Any last questions?
Uh-oh. Let's go, Jesslyn.
Why you always put me
What
on
do you
pressure?
enjoy? What do you
What's the pressure?
what do you enjoy more? Selling real estate or the mortgage brokerage?
I really love this question
I kinda
because
last
I've done both, and I've seen the joy most from my customers that have bought a house. Like, you see that they're really grateful, and I love that. That for me has been very heartwarming. Just because you feel that you can help out somebody that probably didn't know that they can qualify for a mortgage. Like my I-10 clientele has been amazing.
Oh, wait.
Really?
Wait.
Let's talk
Yeah.
about
Yeah.
that.
Wait.
Wait a minute.
Yeah.
I could buy a house with an I-10. Like, anybody could,
yes.
somebody
I
could
know
buy.
that.
Yes,
No
you can.
way.
Yeah, just with your
I
tax ID.
understand the businesses, yeah, but let's say people who don't have a social life.
Exactly. Yep.
The
You
American
can buy
dream is real, my
Yes.
friend.
The
I
American
mean-
dream is real.
The
And-
American
and
dream
some
is
people
real.
don't
foreign
even know.
investors, they have to be able to buy a house too.
Exactly.
Wow,
True.
this
And that
is
that
amazing. This
clientele.
is something so new to me.
Yeah, and a lot of people, I'm surprised that a lot of people don't even know about this.
Yeah.
But you can even do like if a lot of my
I have a
my
lot of that
I-10
clientele. I'm gonna push them
Yeah.
to invest.
And if they have like businesses and stuff, don't worry. Like, we got you. We got you. Like, I have the right program for you. Trust me.
Wow, that's amazing.
Yeah.
I got two questions. I might have forgotten the second, but the first one, return customers, on both ends of the spectrum, being a real estate agent and then being a mortgage broker. Where do you see the most return customers?
From
for that?
from definitely the mortgage side, a lot of referrals, family members that refer me to them, or even refinance. So a lot of it comes from the mortgage side mostly that I have seen. Yeah.
That's kind of us too. Same thing.
I'm gonna
Yeah.
I'm gonna tell you one thing. Before I got into this real estate thing, I never thought I was gonna buy anything because I was like, how am I gonna get approved? This and bang, bang, bang. So people, please contact Hidey.
Yeah.
Even if you think you will not get approved, she will let you know what you can buy, at for how much you got approved, what your payments will be, and then we go out and we call Alex, and then we find the whatever you
dream
want,
home.
your dream home, your dream apartment, your dream this, your dream that, and we make it happen.
Dream multifamily.
In a
Yes.
month, right? We'll make all of that happen.
We could. I've closed loans in 14 days.
Look at that.
Yep.
So
14 days.
give her a call or hit her up on DM. Drop
Yes.
your Instagram again, your website.
Yes.
Bias
_.
Bias
And-
Mortgage _
You can find my link under my bio on Instagram.
on her link tree. You got a link tree?
Beautiful.
I don't
You gotta
don't
put
hate
that
me
in.
for that. Don't hate me for that. Oh my gosh. But I do have, Instagram, TikTok. Find me there.
Okay. Will
Yeah.
you be doing some of those videos that I seen Alex was doing?
You haven't seen my
I
videos?
haven't seen yours. I seen Alex.
I'm on TikTok.
I
You gotta
wanna-
see
I wanna
them.
see
Yeah, you should see them because the thing
Yeah.
is that he does all of like our jewelry store things.
Okay.
And he's the one that's always telling me, let's not do the videos you like. Let's do informative. And
Yeah,
those are
you
the videos
should.
that go far.
I keep on telling
Exactly.
Yeah. So and his videos are
Informative videos.
very informative.
Because you see how you asked me about the diamond cut? I don't even know what you were asking me. I was just
Oh, you
like,
see
I
that?
just like the teardrop. And
Yeah.
then you said, okay, it's the pear shapes. And I'm like, oh, okay, the
Yeah.
halo. You see, those are
Yeah.
things that I didn't
It's
know.
a video idea right there. Thank you.
Exactly.
Yeah.
Yeah.
Thank you very much.
So explain
We'll
the
do that
halo.
tomorrow. We'll
Yeah.
get different cut diamonds and we'll do a video on that.
Yeah, for
Okay.
sure. You should definitely do it.
Yeah.
Yeah.
And then another one talking about the size of diamond. Oh, yeah. Thank you very much. Appreciate that.
Yeah. You know,
Size, the color, everything.
and then the carats, because I know that a lot of people might,
Yeah, the
be
caraway is the
confused.
size.
You see, I don't know nothing about carats, but I just know that 10, 14 is
Oh,
different.
then that's the gold carat.
Oh,
Purosity.
Yeah.
How pure the
Purity.
gold is.
Yeah.
So
10
Okay.
with what other metals did they?
It's mixed.
Yeah.
Because
Okay.
gold, 20, like pure gold is too soft. So if I have pure gold on this ring and I put it on, I could just squish it and it's gonna.
so why is pure gold white?
No, pure gold is yellow.
Oh, so
This
then
is 18 karat gold,
18
but it's
karat
white
gold.
because it has other metals that they mixed in.
So it's not really
Mhm.
gold?
So they'll mix
It's
it in
still
with
gold.
like
Oh.
silver or platinum or
Yeah.
Copper,
other
zinc.
copper.
And
Wow.
weird.
Copper is usually like the rose gold that they'll mix it in. And things like that.
So 18 karat gold is 75% pure gold. 14 karat gold is 57.5% pure gold.
That's 18 karat?
18 is 75%.
Okay.
And then 14 karat is 58.5%.
Wow, so that's not even half.
That's
That's
a little bit
yeah,
more than
a
half.
little
And
bit
then
half.
10 karat, which is the hardest one because it has all the other metals, is 41.7%.
Oh,
of pure
okay.
gold.
So it's not bad.
Mm-hmm.
But it's
And
still not
it's not-
75%. Yeah.
But they do that so that way we can use it as jewelry. Because if we use pure gold, you put it on, you pull it, it's gonna stretch. You
Oh,
put on this thing,
wow.
and then it's gonna you press it
Bend
down,
it.
and it's gonna bend.
I didn't even know it could stretch.
Yeah, it's too soft.
Yeah.
You
Gold
see,
is
these
soft.
Gold is.
this is what you guys need to be putting out because nobody knows.
Yeah.
Who knew that gold could stretch? I didn't know that.
He doesn't listen to me.
You see, now we
I
gotta
didn't
do
know
it.
that.
Dariel,
Yeah.
put that in your notes. Let's go.
I got you.
Thank
Know
you
that
guys for
coming up
having me though.
No, thank you very much.
Appreciate it.
Heidi, right?
Heidi.
Thank you very much, Heidi, for coming in. Oh shit! No, you gotta do this outro because I already did the intro.
All right. Thank you very much for Heidi for coming out.
Thank you for
it was
having
a
me.
pleasure for having you. Again, round of applause, everyone.
Any questions you have, bother her. Doesn't
Yes.
matter. She has time.
Hit
Yes.
her up on Instagram, as you already saw. The links are going to be down below. Watch our last video. It's going to be up here somewhere. I don't know where. It's going to be there. Also, watch our videos on our other page. It's going to be the Melvin H page for the jewelry. Links are going to be down below. Again, there's still the Instagrams. Every link that you can find is going to be down below. And remember to like, subscribe, and we'll see you on the next one.
And
Thank
you
you.
could buy you could buy
guys.
jewelry financed.
Oh wow.
Yeah.
Well, anything on the set is
On the link
technically for
tree.
sale.
Peace out, guys. Thank you very
All right.
much.